Markets kicked off the week in the red as the Strait of Hormuz became the center of attention again. The S&P 500 slipped around 0.5%, the Nasdaq dropped over 1%, and the Dow held up better, down just a couple hundred points. The reason? President Trump announced the U.S. is reinstating what he's calling a blockade on Iranian shipping through the Strait of Hormuz. According to his statement, it only blocks Iran's ships and customers, while the U.S. positions itself as the so-called guardian of the strait. And yes, that comes with a price tag. The plan includes a 20% fee on all cargo shipped through the strait, framed as reimbursement for security costs. This followed a rough weekend between the U.S. and Iran. Tehran hit American facilities across several Gulf nations and claimed it had shut down the strait entirely. Trump pushed back on that, saying commercial traffic was still moving through just fine. Iran wasn't backing down either. Their military rejected the idea of a U.S. takeover and warned Gulf countries not to cooperate with Washington. Reports also came in of retaliatory strikes hitting Bahrain, Jordan, Kuwait, and Oman. Oil did exactly what you'd expect. Prices jumped more than 5% on the news. U.S. crude broke above $75 a barrel, and Brent crude pushed past $80. That kind of spike doesn't just affect gas prices, it's also stoking fresh inflation worries heading into a big week of economic data. Speaking of which, Treasury yields moved higher right alongside oil. The 10-year yield climbed to just above 4.6%. The 2-year ticked up to around 4.27%, and the 30-year crossed 5%. Rising yields plus rising oil is not a combination the market loves, and it's already shifting rate expectations. According to the CME FedWatch tool, traders are now pricing in a 69% chance of a Fed rate hike in September. That's a hike, not a cut. A real shift in sentiment driven by inflation fears tied to energy prices. Gold and silver felt that shift too. Both metals dropped for a second straight session. Gold fell over $100 to trade near $4,009 an ounce. Silver dropped more than $2 to land around 57.82. A stronger dollar and higher rate expectations are the main drags here, and if oil keeps climbing, don't be surprised if precious metals stay under pressure. Now let's talk chips, because this is where things got messy. SK Hynix had an incredible Nasdaq debut on Friday, popping around 13 to 14% on its first day of trading and raising $26.5 billion, the largest U.S. listing ever by a foreign company. But Monday told a very different story. Shares reversed hard, tumbling anywhere from 8 to 15% depending on the market you're tracking, with the steepest drop coming back home in Seoul. Samsung got dragged down too, even after posting a massive 19 times year-over-year profit jump. That tells you this isn't about company performance, it's about sentiment shifting on the broader AI trade. The pain spread across the rest of the semiconductor space. Micron dropped around 5%, Sandisk fell double digits, down about 11%, Seagate slid 5%. AMD was down 3% and Intel dropped 6%. Even ARM Holdings and Marvel got caught in the selling. One portfolio manager summed it up well, saying the AI trade got ahead of itself short term, but he still believes it's alive and well long term. Worth keeping in mind before anyone calls this the end of the AI rally. Overseas, South Korea's KOSPI officially entered bear market territory after another brutal 9% drop in a single session. That's one of the sharpest moves in years for that index, and it's a clear sign panic selling took over in Asian trading before U.S. markets even opened. Banks are also in focus this week. Shares of JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, Citigroup, and Wells Fargo all traded lower Monday ahead of their earnings reports. Big picture, earnings season kicks off Tuesday, and expectations are high. Analysts are forecasting more than 23% year-over-year profit growth for the S&P 500 in the second quarter. Netflix, Johnson & Johnson, and United Health also report this week, so there's a lot on the calendar. On the data side, keep an eye on Tuesday morning. The June CPI report drops, and economists are expecting a slight monthly decline, but a year-over-year increase of around 3.8%. New Fed Chair Kevin Warsh testifies before the House Financial Services Committee that same day, and markets will be parsing every word for clues on where rates go next. PPI, retail sales, and jobless claims are also on deck later in the week. So here's where things stand. Geopolitical tension in the Middle East is driving oil higher. Oil is stoking inflation fears. Inflation fears are shifting rate hike odds, and that combination is putting pressure on tech, chips, and precious metals all at once. Energy names are the one bright spot cushioning the broader market. With earnings season starting tomorrow and a stacked economic calendar this week, volatility isn't going anywhere just yet. That's the wrap for today. Stick around, because this week could set the tone for the rest of the summer.